do not buy gold right now, and I'm going to show you why. I don't do a lot of videos like this, these like current event, even almost like gotcha videos or even predictive videos. But this one I feel like I have to share because there's a lot of people that can be hurt if they don't really know what they're looking at. And I know a lot of people who watch my channel are business owners and entrepreneurs, and they're always looking for a way to make a dollar. But I have been in real estate for a really long time. In fact, most of my life actually. And when I'm thinking about that, wow, that's a little depressing. But I've been in real estate for quite a while, and I am the type of person who really doesn't like to sell any assets when I have them. And if you are and over the years, I have also collected precious metals, and I have watched the pricing go from $5 and $8 ounces of silver. I definitely traded more silver than gold just because it was more affordable for me at the time. But I did end up with some gold. But I started paying attention to commodities. And if you're someone who is paying attention to the price of gold, you have watched it go from sub 2000s into and above over 5,000 and almost I think it peaked around 5,300. No, I think it was actually 5,600. I think it hit a peak real quick before it retraced. But there's people out there talking about $6,000 gold and that this is a good buying opportunity. I'm going to tell you that you're probably not going to see $6,000 gold in your lifetime if you're watching this video, and that means you might have to live for a really long time. So I'm going to show you why, though. I'm not because this is an opinion. I'm just going to show you some math, and not technical charting, but actual math and why this works. So I'm going to show you this right now. Again, this is not going to be a super long video, but I do feel like this is, oh, that is not going to be big enough. All right, let's go here. Hold on a second. Or I'll take myself down, yeah, you should be able to see that. Okay. I'm going to take myself out of the screen completely. So what you're going to see here, this is a chart of gold as it relates to the median prices of real estate. And I did that over the last 40 years. Okay. So when you're looking at this, you're thinking, so just as a quick example, if I took the median house prices of what houses are selling for and divided that by the price of gold, the average across the last 40 years has been 259 ounces. Okay. So what does that mean? It means that would take, based on the price of gold and based on the median price of real estate, that you would have, you would need 255 ounces of gold to do this. Actually, I did it over the last 50 years. I forgot, started it back in the 70s. Once I did not want the dollar, I didn't want the dollar pegged to the price of gold to make sense for this. So I actually I did it all the way back into 1975. So when I'm looking at this here, is you'll see on the chart right here, where I'll just highlight that really quickly in yellow. You'll see that there is 259.59 ounces of gold to purchase the median house over the last 50 years. Okay, so that's kind of the standard. So when I when I look and I go back and I see what the price of gold is right now, I just plugged in $5,100 because that was the price. In fact, last night I think it closed right at 48.90. So let's just plug that number in. Just put 48.90 in there, and that's 92. But when I plugged this number in, I actually was looking at $5,100 gold, and that puts the amount of gold pieces to purchase the median price of real estate at 88 ounces per gold. Now you might be thinking, what am I coming up with the median house price? Well, the median house price last year in 2025 was $423,000. I bumped that to a pretty aggressive 450,000. I don't think it's anywhere near that for the median house price because the fundamentals of buying houses right now are just not there. So let's think about when we looked at roughly 80 ounces of gold would buy a house. Well, let's scroll on back. Let's go take our time machine and our Wayback Machine. And how about that? 1981, we had similar things going on. We had 84 ounces of gold would buy the median house. And the median house price was just under $39,000. I know, hard to believe, right? So you might be thinking, well, what in the world was going on during that time? What's old is new again. That's right. We were tussling with Iran. They had the hostage crisis was going on, and yes, here we are, 40 years later, and it's like, wow, this is like Groundhog Day all over again. So I can't make this stuff up. This is what was going on. So here's the function of it. So keep in mind, you got housing prices as the numerator at the top, and you got gold prices as the denominator on the bottom. So back then, you were looking at 84 ounces of gold to buy the median house. Okay, so looking at the fundamentals today and knowing that there's no expansion right now for housing prices to go up because just again because of the data, just the fundamentals don't support increasing housing prices. That means the denominator has to go down to get this thing back in alignment. Okay, so that is an important consideration here. So when people are talking about $6,000 gold, I'm telling you that's just it might get there for a moment, but it's not. Like right now, yesterday, I'm sorry, today, gold has gone from 5,100. Just as we're getting ready to close, it's at 48 in the 4850s. I don't have it in front of me, but 4850. So you might be thinking, well, people are thinking that this could be an opportunity to buy gold. I'm telling you, gold has a long way to go, and I mean down. So in order to get this back into alignment, let me take myself back down again. So in order to get this back into alignment, that would either mean that median housing prices have to go to like 900,000. And even then, it's not even right. That would be like, I think it's like 1.3 million. I played with this earlier. Yeah, it'd have to be like 1.3 million for median housing prices, which clearly that's not practical, right? So again, even $450,000 last year in 2025 was 423,000. This year, I just said, okay, well, let's say it's 450,000, which I don't think it's going to be that high, but let's just say, just for the the purpose of the display here. But let's say it's 430,000, which is probably more reasonable. That puts us back at 84 ounces of gold, which was the same price in 1981. Oh my gosh. So let's leave it at 430,000. So what does that mean for the price of gold? Okay, well, where does this number have to go to keep that number at 430? All right, so I think it's going to be somewhere around 3,600. No, it's actually more than that. 2,300. Oh my gosh. So 1,800. Okay, so we're getting closer. So $1,800 gold. Let's say 1,650. All right, a little bit too far. $1,700. Okay, so we'll call it $1,700 gold. I don't think it's going to go that far, to be honest with you, because and I'll show you why. I'm going to show you a different chart here real quick. So put that back there, just so I don't mess myself up. So I'm going to show you a different chart, and let's see here. Share different screen. And the reason I'm showing you this one is so you don't run out and buy like $4,800 gold or $4,600 gold, because I think honestly, I don't get paid to make predictions. Like, I'm not that guy. I don't really. It's up to you. You can do whatever you want with this information. What I ended up doing is I ended up selling all the precious metals that I had and took a short position on gold. So however you do that, you can figure out how to do that on your own. I'm not here to teach that, but I just want you to understand like what this could actually look like. So again, let me put myself down. Oops, other way. So what this looks like, what you're looking at here is the price of gold in, what is that, 1980. Okay, so that's where it peaked there in the 80s. So that number, I'm looking at it from, okay, so from 1979, which was 12 months prior, the price of gold was $228, give or take. And then it shot up, it almost tripled in price, which is crazy. It went up to $675. Now, from that peak, it took a while to get that number back down to where it was where it stabilized. Okay, and that was mid 300, so about $350 gold, somewhere in there. And that took 24 months. So if you're thinking you're just going to go and capitalize and this is going to like happen overnight, it does not happen overnight. So more than likely what you're going to see is, again, look at the equation here. It's a function of both gold prices and housing prices. So what you're going to look at is gold is going to come down. Housing prices probably within the next 24 months are going to go up. Right now, we just don't have the fundamentals in housing, but I do believe that they're going to come back because the interest rates are kind of wonky right now and not as many buyers. There's days on market that are getting longer. So I think housing prices will eventually go up as gold comes down. So honestly, I think we're going to see $3,800 gold pretty easily. Beyond that, I have no idea, but I'm thinking it's going to be somewhere. If I had to guess, I think it's going to be in a range between 3,300 to 3,800, and I think we're going to see that again. So I'm just looking at that, and you can do this by the way with any commodity. You can do that with basic and on housing prices, and you can look at that with what's going on with oil or boxes of cornflakes. I don't know, whatever it is you invest in. One other quick thing I want to show you, which is actually super cool. Actually, this video is getting a little bit long. Maybe I'll just do it on another one. But actually showing that housing prices do come back, and they came back within a couple of years. So that other chart that I was showing you, it showed housing prices in, let's see, in 1981, the median housing prices was just under 39,000. By 1985, which was just 4 years later, the median housing prices they more than doubled. And so they went in 1985, they went to $83,000 with median housing prices. So again, it's a function of both sides of the equation. So do what you want with this information. Again, I'm not here to give you stock advice or trading advice. You need to do your own due diligence. Feel free to argue with me in the comments, but I'm just saying, like, right now at 48.50, I think it's not beyond the scope for us to wake up at some mornings and there's going to be, $4,600 gold. It's going to have big movements overnight, and if someone's buying at 4,600 thinking they're going to catch the wave, you're catching a falling knife. I would wait for it to settle out in the 3,000s before I purchased any more gold. That's just me. So would I sell my gold? That's what I did, and that's how I captured in the gains on the way up, and then I'm making some money on the way down as well. All right, that is all I have, everybody. Have a great day. See you next time.